What is the number one DeFi yield farm in crypto right now? In this video, I'm going to discuss exactly what I believe is the very best yield farming opportunity right now. And in this video, I am going to explain to you exactly how it works, what the risks are involved in it, and explain to you why I believe this is maybe the best farm in all of DeFi and all of crypto. So with that being said, my name is Adam Winnig. I've been involved in Bitcoin and cryptocurrencies since 2014, and I made this whole channel to make your crypto investing experience easy, lucrative, and fun. With that being said, let's go ahead and take a look at this. So just for context, if you're watching this video later on, where we're at right now is we are sitting at right around a $30,000 Bitcoin. Okay, we've seen quite a sell-off. This is actually just post about a week after the Luna and UST depegging event. So currently the market is spooked, right? People are scared. People are less risk averse than maybe they would be initially. And people are looking for steady, stable plays that they can earn passive income in. And also, it seems like people are wanting to have more exposure to blue chip assets like Bitcoin and Ethereum, which is part of the reason why I believe that this could be the number one farm in all of crypto right now. So let's go ahead and talk about it. So it's this platform called GMX. And before you turn this video off, because you've heard me talk about GMX before, I'm going to talk about it in a slightly different way. I am going to explain how it works, but I want to make sure that you're really aware of the benefits as well as the risks that are involved here. So if you're unfamiliar with what GMX is simply a leveraged, decentralized trading platform. So just like how on Binance or on KuCoin or your centralized exchange, you can trade assets, you can also do that here on GMX. But the difference is, right, it's decentralized and you can trade with up to 30x leverage, which is crazy. And the thing that I really like about this play is because what we're about to do allows us to bet against leverage traders in a sense. And as you know, trading with leverage is mostly not a good idea. And most people end up really like blowing their accounts and losing lots of money. And, we'll let people do that. But on the other hand, this is going to allow us to, in a sense, be like the market maker, like the casino or the broker, and to basically win money every time people are losing, which the statistics prove that this is a really good thing to do. So with that being said, if we come on over to here, there is something that you should know. So first off, that this platform works on both Arbitrum, which is an Ethereum layer 2, and it works on Avalanche as well. Now, with that being said, the few things that you need to know about is there are two tokens. So there is the GLP token and there's GMX. So first we'll spend some time talking about GLP. And this is what I am personally in, is actually in GLP, and I'll explain why. But what GLP is essentially, it's a liquidity token, or basically when you own GLP, you're essentially providing liquidity to this trading platform so that way traders can go and trade and swap different assets, right? With that being said, GLP is also an index asset. And I love indexes because it's a more diversified, simple, safer approach to investing in any market. As we know, this was the winning formula for the stock market over the course of the past, decades, actually. It was really the winning answer. And so what GLP is made up of is it is made up of Avalanche, Ethereum, Bitcoin, USDC, USDC, and MIM. Now, with that being said, you can see this weight here. So the target weight is to have 15% Avalanche, 15% Ethereum, 15% Bitcoin, 39% USDC, 15% USDC, and 1% Magic Internet Money, right? MIM. Now, with that being said, you can see the actual weighting right here. So 14.85% in Avalanche, 18.5% in Ethereum, 21% in Bitcoin. Now, the reason I love this is because these are all blue chip assets that I want to hold right now. Like, I want to accumulate more of these assets, especially at these prices, right? Now, if we were to just switch here on over to Arbitrum, you can see exactly what it's made up of on Arbitrum. So GLP is made up of Ethereum, Bitcoin, Chainlink, Uniswap, USDC, Tether, DAI, Frax, MIM, right? So still good blue chip assets here, but I'm currently using Avalanche because there's much better fees. And yeah, that's just what I've done. So this is what GLP is. Okay, now how GLP actually works is GLP essentially is a token that when you buy it, you automatically are essentially providing liquidity on their platforms. So for example, when you buy GLP, you can just buy it really simply by just, clicking whatever asset that you'd like to buy it with. So whether it's AVAX or Ethereum, Bitcoin, USDC, you can go ahead and just buy however much that you'd like to. You enter it, boom. When you buy it, you automatically stake it. So you're automatically providing liquidity. There's no extra button clicking that you need to do here. But the best part about this is that you're earning 51.61%. And this has been going on for, I've been in this farm for quite some time at this point, and it hasn't really diluted. I mean, it's gone down, it's gone up, but it's still up as like almost as high as it was when I first got into it. And so the cool part about this is you actually earn the fees in AVAX, which I'm totally cool accumulating at this point. I like it because it's not some farm token, which is, bound to go down to zero, which is, how farm tokens are a lot of the times designed, right? So you earn majority in AVAX, and then you also earn in something called Escrowed GMX. We're going to talk about this a little bit later on, but the way I look at this right now, I can easily dollar cost average into the markets, say at 30,000, I think it's a good place to buy. If you go to 24,000, 25,000, I'll buy some more. If we go to 20,000, I'll buy even more, right? And I think it's a great way to dollar cost average into the market. And also we're earning 51%, like at these low prices, which if you think about when prices return, this could be really, really powerful. So yeah, essentially when you buy GLP, you earn 70% of the trading fees that happen on this platform. So every time somebody's going and they're making a trade on this leverage trading platform, you're earning 70% of the platform fees. Okay, so we'll talk about a little bit of the stats in just a second. Okay, now the same thing when you come here, you can also buy it on Arbitrum, right? For example, and the little difference is that you're earning a little bit less fees, right? But at the same time, you're earning fees in Ethereum, which for some people might be really attractive. I think it is very attractive to earn in Ethereum as well, right? Like if you'd rather accumulate Ethereum, then boom, this may be the way that you want to go, right? Obviously, the gas fees, getting the money over here and stuff is going to be a little bit more challenging, but, earning 31% in Ethereum, that's good. Like you can't find that pretty much anywhere, right? Now, with that being said, let's go ahead and let's take a look at the actual stats here, okay? And then I'll talk about GMX. So the actual stats here, we can see this is on Arbitrum. We can also see on Avalanche, we can see total fees, $40 million worth of fees. 70% of these fees were paid out to GLP holders. You can see $30 billion in total volume. You can see that here. Okay, and then you can come over here and you can also see the fees here. So you can see, total, there's been, $40 million worth of fees that have been generated, which is really pretty cool. Obviously, 70% goes to GLP holders. Let's see what else we can take a look at. You can also switch it over here to Avalanche and you can see, about $13 million total fees that have been generated. You can also see the trader's net P&L. And this is interesting, right? So you can see that the net P&L of these leverage traders is like negative 4.7 million on Avalanche, right? So historically, it's good to bet against leverage traders, right? And that's the reason why all these brokerages and centralized exchange, decentralized exchanges are becoming massively wealthy entities, is because they're essentially like betting against a lot of their traders, right? And this happens in a lot of markets, in Forex, stocks, all of that, right? So you can also see other things like unique users. You can also see the number of new users. All of this here on this stats page at stats.gmx.io. Now, the other token is something called GMX, and GMX is basically like their governance token in a sense. And with GMX, when you hold GMX, you can buy it, right? So first you have to buy GMX and then you can stake it here. So with GMX, you do actually have to add that extra button click and actually stake it here. But when you do that, you also earn a percentage of fees. You earn 30% of the platform's fees. Now, why would you want to potentially buy GMX? Well, when you buy GMX, you're basically betting on the growth of this platform, gmx.io, as there's more volume, as there's more traders, as this becomes a more popular thing, then the price of the GMX token should actually go up. And that's the way that you want to think about it. Now, about the GMX tokenomics, you can see that there is max supply of 13.25 million. And you can see that only 250,000 GMX tokens were distributed to the team. Supposedly, there's no VCs involved in this, which is good. So there's no VCs waiting to dump. And it's linearly vested over the course of 2 years, right? So these will slowly drip out over 2 years. So there shouldn't be some like drastic downward pressure on the GMX token like all these team members wanting to sell, which is good. So now back here to talking about GLP, right? GLP is the index token. Basically, we own these blue chip assets and we're earning 51%, 35% paid in AVAX, 16% that's actually paid in something called Escrowed GMX or ESGMX. Now, before you get all confused about that, it's really not that difficult to understand. Basically, it is you're getting paid the additional fees in the GMX token, but they're escrowed, meaning that they need to vest for 365 days. So what does that actually mean? So it means we're getting paid 35% in Avalanche and we're getting paid 16% in GMX. However, those GMX tokens only become available after 365 days. So they're vested, right? And I guess every day, every second actually, some of them are actually getting put on to made available to you, but it takes 365 days for all of them to become available to you. So with that being said, obviously this sounds amazing, right? Dollar cost average into blue chip assets, but what are the risks involved? And you really need to understand that this video is not financial advice. This is not me saying that you should do this. I don't know your situation. I don't know if you should do this or not, but I have allocated some funds here just in all transparency. But as we've learned, nothing is too big to fail, right? And anything can happen in cryptocurrency. So I personally am not going to allocate any more than like 15% maximum of my portfolio to this platform, just because there are always risks and anything can happen. Now, a couple of the risks involved in this platform is one is that the team is anonymous, okay, which for me, a lot of the times is a red flag. However, this has been around for a little while at this point, and it doesn't look like there's any it's a really well-run operation, and some really bright minds that I follow have also gone ahead and are farming on GMX. So I feel pretty good about it. Now, the other risk also is general smart contract risks. Obviously, if there's a bug in the smart contract, even though it has been audited, this is always a potential for any farm that you get invested into. So it's something just to be well aware of. Now, with all that being said, my overall sentiment of this is I think that people are going to want to gamble. Okay, they're going to want to use 20, 30x leverage. So I don't see this thing going away. I also don't see that, people are really overnight going to become winning traders, right? And so I like this as well. And I also think that dollar cost averaging to blue chip assets, fantastic. I love it, especially at this phase in the market, earning 51%, amazing. So I really like this play. I think it could be the number one farm in all of crypto right now. But let me know what you think. Is there a better farm or better DeFi opportunity that you see right now? Let me know in the comments below. I'd love to actually hear from you, and maybe I can make a video about that, reviewing it as well. So that being said, feel free to check out some of the other videos on our channel, and I hope this was helpful.